Top of the morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for June 26th, 2018. Well, my goodness, yesterday was an ugly day as those sellers really came in reacting hard to the White House's news that they may restrict sales of technology to other countries. And the selling really hit hard in several places, with some companies experiencing their biggest sell-off of the year. For example, like Netflix, their biggest one-day sell-off in a year. And so pretty ugly as the day went on yesterday. Luckily, we did catch a little bit of support. Now, here in the diamonds, taking a look, we do have a little bit of a support level right in here. Nothing super strong for a support level, but that just happens to be right where that 200-day moving average is, and we bounce off of that after losing that 200-day average yesterday. Pretty brutal in the selling yesterday, and I don't suspect we're going to bounce right back until we get some resolution, maybe in at least some of the uncertainty goes away in these trade tensions that are going on between the U.S., China, and other countries. As you can see, futures are pointing to just a slightly bearish open today, so selling may not quite be finished. And you know, it's entirely possible we could see just kind of a choppy, restful day as the market tries to absorb what happened yesterday. So don't expect that big bounce back. You know, one of the things I used to do as a trader, I'd see this big sell-off and say, well, it has to come back. These are good stocks. They're going to come back. And I would jump in trying to anticipate the bottom. Bad idea. I lost a lot of money doing that. You don't want to anticipate. You want to wait for those buyers to really show up. Remember, it's not retail traders that move the market. It's the institutions, and we need to wait for those institutions to decide that now the market is cheap enough and it's time to start stepping back in, and they will be the ones that bring in the clues for us to follow. So kind of wait and be patient. It takes some time to move, and I suspect this sell-off is going to take weeks, if not months, to repair some of the technical damage that's been created now. So be really careful and be a little cautious. Exercise considerable discipline as we go forward. Remember, we're likely not past the risk of additional shockwaves in the market. China could launch something at us in the trade war that shakes up the market, and then we fire back. So there's a lot of potential shockwaves that could occur, and we want to be really careful how we plan forward. Now let's take a look at the SPY, now officially breaking its uptrend, confirming that uptrend break. With this, we had this little rally right here where we failed. Here's why I say confirming. We failed. We rallied back to test that downtrend line, that resistance, and then dropped on through, confirming that selling. The good news is we stopped right here at this support level, and we stopped right there on that 50-day moving average. We rallied back to it. But notice we're seeing a little more selling this morning. We could easily fail that and move right on down here to that 200-day moving average, like the Dow has already done. So be careful here. There's no indication of buyers really stepping back in. I think this may have just been a short-term oversold bounce that occurred yesterday. So be careful. Don't chase short or long. Wait for those good signals to occur. If we take a look at the Qs, The Qs took the hardest hit yesterday. Just an ugly beating, honestly, that probably caught a lot of folks by surprise. Failing, gapping down and failing really hard all at once. And as you can see, we have now failed our uptrend. And with luck, we have held on to this support. So we've got a little bit of support right here trying to hold the market up, and we are above the 50-day moving average. That is a good thing. So we need to catch this support in here. But again, once again, don't expect just to bounce right back. And by the way, any rally back, we have to be very focused on that rally back. That any rally back could now be subject to failure at resistance and creating another lower high. So keep that in mind as you're planning forward. You know, jumping in right here may not provide enough upside move before we run into that potential resistance for you to make much money. So plan your trades carefully and be very disciplined in how you move in this market right now. If you are a new trader or an inexperienced trader, you know, one of our members yesterday said something really wise. He says it's often a lot easier to watch from the sidewalk than it is to watch from the middle of the road. So think about that. You can certainly stand aside and watch this occur and then get back in once it starts to improve. Just be really, really careful. There's no need to rush here, and there's no need to put yourself at tremendous risk while we're shaking up this market right now. Let's take a look at the IWM. IWM also giving up support and giving up its trend yesterday in a pretty harsh move down. And again, we're seeing just a little bit of selling following through this morning. So be really careful. We've got a long ways to repair some of this technical damage in these charts. Now this held up right at the 34 exponential moving average, which is a good sign of strength, and there's a little bit of price support right here. But let's keep in mind, there's a lot of work that's going to have to be done to recover this. And as long as those trade tensions continue to grow, it may be difficult for those bulls to step in and start pushing things back up. Let's take a look at the VIX. The VIX, remember yesterday I said we could easily see this push up here and break through this support. Resistance. And now we closed above that level. And any hold up in here could potentially send us higher in fear. So watch that VIX. Fear is coming up. That means all of you option traders out there, your option prices have started to increase based on a sharp increase in implied volatility. So watch that carefully. Those option prices are going to be dramatically affected as fear is welling up here in the market. And look how quickly, remember, it was just right in here in February where we had a spike move up, kind of not similar to what we experienced right here. We spike moved up above that resistance area and then pow. Now, I'm not suggesting that's going to happen today. I'm just suggesting the possibility exists, and you want to be careful moving forward in this market. Let's take a look at T21. 22. T21 22, the 4-week new high, new low ratio. As you can see, we dove hard yesterday, but we still have room to the downside before we reach that bullish reversal zone. So there's nothing in here that would suggest that we have to bounce today. And even if we do bounce, we want to be really careful not to just chase right in, because that may be just a false false move before more selling comes in. So you want to watch that closely. We do have more room to the downside, according to T2122. Let's take a look at the economic calendar today. Our economic calendar has a couple market moving events on it today. Nothing major market moving, but we have the Case-Shiller number expected to show housing prices improving, and the consumer confidence is expected to remain extremely strong as the fundamentals of our economy continue to hold up very, very well, even though we're seeing the selling in the market. Everything else, beyond that, some bond auctions, a few outside reports, and two Fed speakers today to be made aware of. On the earnings calendar, there's only 13 companies reporting earnings. We will hear this morning from Lennar and FDS. I don't know if they've come out already. FDS, I see the bid-ask is spread real wide. It's not probably not reported yet. And Lennar. Looks like Lennar has reported well and looking for a gap up here. And then after the bell today, we have Sonic and Jamba Juice and a couple other really small companies reporting this afternoon. So nothing major that could move the market around. One thing I would like to point out to everyone, as ugly as this is, you might want to start looking toward the consumer defensive sector, the consumer staple sector, utilities, high dividend payers. I'm beginning to see a rotation toward those sectors as this market gets kind of ugly. People will move toward safety. Investors, traders will move toward the safety, relative safety of those stocks where they can get that higher dividend. So you might want to look there. There are some good charts over in that area. Everyone, take care. I want to wish you all a fantastic day. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube. Follow me button on Facebook. Click those, drop a comment if you feel the video is worth it. And always, always, always feel free to share this video with any friends and family. Everyone, I want to wish you all a fantastic day. I want to wish you all great success. And we will talk to you all bright and early Wednesday morning. Take care, everyone.